All right, we are back again for another weekly analysis on Euro USD. Right, looking at our chart, you can see this was the last part for us to do. So that we did past week. That's the last week in August. We're in a new month, so this is the first week in the new month. So before we just jump I'm going to take a look at the expected news. We have Joe's job opening for US on Wednesday. I'm speaking basically Euro USD news. You have S&P Global Manufacturing PMI USD again as on Tuesday of high importance, and we have jobless claims as usual on Thursday, and that is all. Okay, I just wanted to confirm this, and we'll have non-farm payrolls, which we have on Friday. So non-farm payrolls, let me just speak on that because this is what usually determines the move for the for the week or for the month. Sorry. So for non-farm payrolls, we're expecting good news for the dollar, which means Euro USD is gonna fall. We're expecting to fall. So everything that's going to be built up, right? Just make sense in the sense that Euro USD is expected to do what? Fall. Now that being said, let's look at the analysis for. So quickly, we'll just take a rundown on the analysis we did for the past week. We see the first part. We got the first part, which is that we're expecting price to. Sorry, let me get this. Which that the first part we're expecting price to fall from here, which it did, pick up from here and keep going. So based on based on the fact that we're strongly bullish all this while, right? I was of the opinion that we should take a trade from here and keep riding it up if we're supposed to continue going bullish. But fortunately, it's only the first half that we got right, which is the move down, which is retracement down. But the move back up was not as we expected it to be. It got stopped here, right? And the downtrend started for this week. If you see on the daily, right? The last we had this happen 26, 27. This went bullish. This was the one we predicted to go down. That's bearish candle. This was what we're expecting to keep pushing up. So you can see on this day, it didn't really do much. That's the first sign that the bullish pressure is actually dying or wearing out or fading out. Right. So what happened the following day? We pushed strongly. In fact, once I was supposed to do this on Wednesday after after I saw this because I actually gotten multiple trades here. Right. So after when initially when there was a break of this, what was expected is that we're expected to at most or at least get to this trend line, which we actually did. Right, this is what I mean. So when there was a break of this point, expected I should write the next candlestick, if at all, is going to grab at least 30 pips for it to bounce off this point or off this trend line, which it did to an extent. But once again, the move was not bearish pressure was not that good, and what it did a little pullback, right, to a level on the lower time frame on the 1 hour level. And what happened? And it's dropped again to this point. So now it has broken this daily trend line. So that's just what we had for the week. I'm just saying what's happened. So it sometimes happens this way that uh one half of the analysis will go right and the other half would not go as we predicted it to be. So That being said, let's go straight to the analysis for this week. So we've cleared the charts, right? And this is monthly charts. You can see. Uh, let's just identify some things. Let's do, since this is a monthly. We'll have printed a new monthly candlestick, completed a new a monthly candlestick. So let's just do this. So you can see these are the last high, the last low. So we have this range to play with, but there's nothing much to see. The only thing I need to see is that, remember, there was once a channel, that is at this point. There was once a channel, right, that was being supported somehow. It broke out of that channel, but it failed to close. You can see this long wick, which means there's a lot of rejection back to this point. Price was not strong enough to close above this point, which means bearish pressure, strong bearish pressure is really coming in. It's coming in. Now, if you had closed somewhere here, we would know that bullish pressure was still there. It's about 100 pips, but it had the opportunity. When I tell you it had, I mean it had. It could have just ranged this last week, but instead the move, there was no news. There was no news release that was influencing it to fall. In fact, all the news releases were against the dollar. Against the dollar. The last thing we just had was that's 2 weeks ago, when they had the Jackson Hole conference, when Jerome Powell, first chair, talked about the interest rates. That was what triggered, made the dollar weak that period. And after that, there was nothing to say dollar was going to be strong again. But what happened? we had we had that influence that caused it to not close strongly bullish. And not only that, it also did not close. So you can see on the monthly, there's no break, there's no break of structure, because this close was not above this guy. So currently, we don't know whether, we still can't say where there's a break of structure. We don't know whether there's an uptrend, because we're expecting this candlestick to close above any of these highs, especially this high, before we say, oh, we are now bullish on the monthly. But currently, we have not broken this. This is the last high. We've not broken this, and we have not broken this either. So what we just did a pullback and what. So anyway, that's that for the monthly. We don't really have much to say. But one thing I can say from here is, right, that are going to be expected to be bearish. In fact, we expected to range a lot this month. That's all I can say. Well, remember, the US election is coming up in November, but for this September, why did I say so? Because we might have to fill this week again, right? So we'll have to fill this week again, and possibly this fair value gap. I say fair value gap, this is what I mean. So two things. This is why I say we're going to range this month. We'll have to fill this fair value gap, which means we might come back to touch this week of 2 months ago, and also we would also have to fill this week. So it means it's going to go up, go down. It has to do these two things. I don't know how it's going to do it, but that's just what I feel. So that's that about the monthly. Oh, so very good, beautiful. So the move has already started. The move has started, right? So I'm going to move this guy. This is last week on the weekly. This is last week on the weekly. It's looking good. I can see this print of this strongly bearish candle, which means it's only going to keep falling. It's only going to keep falling. It's beautiful. So we can start flipping from here anyway. Now that we've seen that this is going this way. So it's a good thing to note. I'm going to move this guy up to this point for the weekly fib level. Right, that's number one. Number two, I'm going to draw a weekly trend line. It should be this point, right? So what am I expecting? I'm expecting price to do what? To drop up to this point, 9036. This would be a good point for price to actually bounce off or react and maybe do a pullback up before it continues wherever it's going to. But if it's going to fall, expect it, since we're already done this much this week, this past week, expect it to fall up to this point. I don't know what time it might take it 1 week or 2 weeks, but expect there to be a reaction at this point in price on the weekly. So let's not forget what I said. Very good. Now remember when I said something about fair value gap on the monthly. I don't want to draw too many things on the charts. Remember what I said about it, you can see. So this fair value gap now even coincides with the 61.8. See, it coincides. So there's a lot of this is another evidence that we are definitely going to continue the sell. It's very obvious that this week is going to be so whatever you're doing, brace yourself to enter points where you'll be in a good position to hold a sell trade, because it might swing a lot, but just brace yourself for that, especially on Friday. Especially on Friday, it might break below because NFP is usually wicked. This is just 100 pips. NFP does at least 30 pips. At least. If on a very bad day, NFP does at least 30 pips. So and it's on Friday. I expect price to do a lot. Should have done a lot in terms of getting here before Friday. Let's just see. Let's just see. So things like this now, if price gets here before Friday, right? If price gets here before Friday, I'm not sure of how much it's going to do. Except it might do a deeper retracement to the 17.2, right? It might break it to this point. I'll probably do a pullback, but I'm expecting a very strong reaction. Number one, because of this fair value gap. Fair value gap means there must a candlestick must be printed here to cover that space. This space. Candlestick must be printed there. The body of a candle, whether body or wick, that place must shall be filled with a candlestick body or a candlestick wick. That's number one. Number two, you can see the daily trend, the weekly trend line is expected, price is expected, if another candlestick forms, is expected to this week or 2 weeks, in 2 weeks time, expected to touch the trend line at this point, which is still around the 61.8. So those are the other correlations, right? So I think that's all we can see for the weekly. I think I want to take this, yeah, so chat will not be cluttered. What else can we see? I would love to draw another trend line. I don't want to draw too many trend lines. I think this has already been broken, so there's no need. Yeah, so there's no need for that. What else can we see? Okay, so there is another move again. How are we going to do this? This is the daily. This is the daily. Okay. Okay, so I'm considering whether I should use this point or this point. I can't really call this a retracement or pullback. Can we? Let's see what was it actually. Let's find out. I don't know. I'll use that line for you too. No problem. So let's see. Was this a okay? It was legit. Guy was legit. It broke the 50. You didn't. Okay, it didn't even break it. It just tested it. I don't call this a pullback. This is what I'm looking at. Whether I can call this guy a pullback. So I'm looking at. Because if it's a pullback, it means that we can't fib from that point again. We have to fib from here. Okay, so using this, okay, let's do this way then. Yes. So let's do this way. Yes, on the daily, let's do this way. To make sense, to make a lot of sense. So on the daily, this is what I'll be expecting now. I'm not. I've seen something. So on the daily, this is what I'm expecting now. Why did I do this? Remember, the price moves in fractals, right? And what do I mean by that? This was the move up. This was a move up, right? This was a move down. What am I expecting? I'm expecting an AB equals CD. That was AB. I was supposed to expect. I was supposed to see a CD, right? So it keeps doing that. So now this becomes the new AB. There's supposed to be what, a pullback, right? So I'm not saying price does that all the time, but what happened here, and the what makes a pullback valid is that it must do at least 50% of the swing of the larger move. Must be at least 50%. There must the retracement of price must be at least 50% of that, and you would see price did 50%, almost 61.8. So that's why this is a valid. But ideally, it's supposed to be at least three candlesticks, and also why it would be a valid pullback is that this low was taken. This bearish candlestick low was taken. So, yes, sorry, this bullish was taken. This low was taken. So that's why it's a valid pullback. If this one was not taken, it doesn't make it valid. So that's why I'm taking this swing from here, this daily swing from here to here, and accepting that this 61.8 is enough, is the pullback for this swing. Why am I saying that? I'm saying that because I'm expecting price to go up again. Or do I mean? I'm expecting a pullback of, I'm expecting this swing to be done. This bullish swing. Expecting it to be done. I'm expecting price to go up to a 61.8 or a 50. Right? And come to this point. That's what I'm expecting. So I'm not. I'm trying. I don't know if it makes sense, but I'll do it again. I'm fibbing. This is what I'm fibbing, right? We usually fib swings, and I'm fibbing this guy. I'm using this guy as a swing, and I'm starting from this point because this I'm taking this to be a valid retracement where you have a move up, like I drew before. You have a pullback. You have a move up. There's this one too. You have a what? You have a move down. I say this can't really be called a swing because, well, it took it out, but it didn't close below this guy's low. But anyway, that's also what I'm trying to say. So my point is that I fibbed this guy and I got 61.8 at where price currently is, which means this pullback is complete. And if the pullback is complete, it means there's a tendency for price to go high again. It might not break this low, but price has to react at this point, go higher again, and probably continue going higher or fall again. So what I'm expecting is that I'm expecting this guy, this now to be a bearish swing, beginning of the bearish swing. Expecting its price to go at least to 50 and fall again. So I'm gonna draw, this is AB, which is equal to CD from this point. So we're done anyway. So I'm expecting it might not be this much, but we're going to find out very soon how much it's going to be. It might not be this much because I'm already looking at this level here. I'm already looking at this level here. There's a level here, so I'm already looking at it. So I might as well say bring it to this point. That's if price moves up, I'm looking at taking it because and I've seen it happen time and time again, where you don't get to see price get to this 61.8 or 50 in the initial beginning of a swing, right? Or a strong move down or a strong move up. You don't get to see proper pullbacks. Take this one for instance. When this guy moved up, this was meant to be these three candlesticks were meant to put the pullback. This is not an ideal pullback, but it is. But it actually turned out to be. Right. So that's what I'm saying. Because of this move down, I'm not expecting the pullback to be a complete 61.8 or deep 70.2. It might just get to 50 or nearly 50, right, and fall. I'm going to give you further reasons in the 4-hour candlestick. So that being said, I think we've agreed on, I've discovered what is going to happen, or assume this is what is going to happen. I think it might even still fall again before it goes up. It might still fall again before it goes up. So let me bring this. So remember the chart we just cleared, right? There's a trend line we're drawing, which is this guy. Yes. So it sounds funny, but it might not even get to this point. So this is why I did this, because of this level. And if you notice on the 4-hour, right, this guy did this, this guy did this, but for this move down, there's not been any return or retracement to this point, right? So I'm expecting this. So I'll be expecting to take sales here and hold it till Friday, which will just push price further down. So I can take this out. This is not valid. This do not support us. The only thing that would support us is, and it's looking very far-fetched, is this. It's looking very far-fetched. Other price is going to do that. But anyway, this is what I'm expecting. So when the bullish move slows down here or begins to range here, wait for it to do the last high or do a move up. This is what I'm talking about. Because most times when it's time to enter, it's kind of tricky and you don't know whether you should or whether you shouldn't. Price might do something like this. Right? Or you might just see a sharp move and all that, whatever. When it gets to this point, it's going to begin to slow down, begin to rally, to begin to range. And it's going to do a kind of like a false breakout. False breakout, because this is a stop, this is a support resistance. This is a resistance, and there's definitely going to be others around this point. So it's going to try and make people think, oh, there's a breakout, the bullish move is continuing, and all right, and briefly move up. It won't close there. It will quickly come back and close down, and before you know it, has broken out of the range, and it falls. So I don't know if I drew this properly, but just trying to illustrate. And it does this, and this is just textbook whatever. Now that she so this is what I'm talking about. To range at this point, at this resistance point, do a fake out and fall back. So anyway, this is what we'll have. If anything changes, I would try and update probably midweek Wednesday. If there are any changes or any alterations to this, but this is what I'm expecting price to do for this week. It may fall beyond this, but this is what I'm expecting it to do. It may pull back above this guy, but at least 50% pullback is what is the standard. But with the way price is going, it might just fake out to that 50% and fall. But this is what I'm expecting for this week. Adios.